Welcome to Serious Business on NDTV, 30 minutes of hard business news. One topic, one speaker, and a conversation that's relevant to you. I'm Manvi Sinha Dhillon. India had extreme weather on 86% of the days from January to September 2023. That's according to CSE, the Centre for Science and Environment. The Reserve Bank of India estimates up to 4.5% of India's GDP could be at risk by 2030 due to lost labor hours from extreme heat and humidity. I could share many estimates of the risks to India from extreme climate. But today we're focusing on the risk that extreme climate poses to businesses in India. And what can businesses do to de-risk themselves to the extent possible? I'm pleased to welcome Pankaj Tomar, Head of Climate, India Business at AXA, with deep expertise in the area of climate risk to business. Pankaj, thanks very much for joining us on NDTV. Welcome.
Thanks for having me here. It's an absolute pleasure.
So I want to start with very fundamental questions. When it comes to businesses, what is climate risk?
Good question. And before that, let's spend a couple of minutes to understand what climate change is in a very, very simple terms. So climate change essentially refers to long-term shifts in climate patterns, be it at a global level or at a regional level. And these climate shifts are primarily induced by human activities. For example, we are burning more fossil fuels, deforestation, and several other industrial activities which are producing greenhouse gases. So businesses have to understand that these risks are posing great challenges to them. And I may highlight a few just to put things in context. For example, climate change is leading to more severe and intense weather events that is causing disruptions in businesses, their supply chains. Consumer preferences are changing now because the consumers now want more sustainable products. So that is another change. Climate change is doing the impact on the businesses. Third one, it is leading to increase of regulatory pressures. So now there are stringent guidelines coming up on businesses to disclose their ESG related disclosures in a particular way. So businesses are getting impacted in several ways when it comes to climate change.
It's interesting that you've raised sort of three facets because I was thinking of it in very simplistic terms. Business disruption due to extreme weather. But there is also change in consumer behavior driven by climate change. And there is also, of course, the regulatory environment, which is in response to the climate change that we're seeing. I'd ask you to dig deeper because I think it's important to help people understand what happens. So if you take the example of any business, maybe an auto business in a coastal area or any other that comes to mind, to really describe in the recent past the kind of business disruption or upheaval caused by extreme weather events.
Sure. So let's dig a bit deeper and understand the different categories of climate risks. And we have sort of created these categories for people to understand how different climate risks are different from each other. So first bucket of climate risk is called physical climate risk, which is very obvious for everyone to relate. The example you quoted, that the intense weather events are causing disruption to the businesses in the coastal area. This is a typical example of a physical climate risk. And we all have been dealing with it from last several decades. The second piece, which is more interesting and a bit complex, is called transition risk. Because now the world is moving to a low carbon economy. So in this transition to a low carbon economy, there are new and emerging risks coming up. And the example I quoted for the fashion industry, like consumer preferences are changing, is one example of transition risk.
Okay.
Another example you can take for any carbon intensive sector, for example, if there is a coal-based producer, and the expectations are that there will be public policies coming up to, let's say, phase down the productions we are doing from coal-based power plants. So that will impact a carbon-intensive producer. So these are the few examples of the transition risks which we have not thought about when we talk about climate risk per se. So these transition risks will be very different from industry to industry. And on top of it, supply chain becomes a very, very vital point because each industry will have a specific type of supply chain. So supply chain, along with the transition risk, basically completes the whole cycle of, whole gamut of climate risks.
And I think the supply chain piece is another interesting part. The transition one is another interesting part. And I'm going to, again, try and understand exactly how. Assume that I'm a business. And if you had to, I mean, obviously we can't achieve it all in a 30-minute conversation. But if I'm a business, manufacturing, anything, you take your pick. How do I go about asking myself, what is the transition risk and what is the supply chain risk? What are some of the key questions that I need to answer for myself?
Sure. So it's a usual risk management process which we follow even for climate risk. So the starting point is the assessment. So the first point is that we should know the exposure and vulnerability of our businesses from climate risk. And that is the starting point for us. In technology term, we call it climate screening. So we climate screen our portfolios, our supply chains to see if there are certain elements which are more prone or vulnerable to climate change than others. So that is the assessment part. Then we make a transition from assessment part to something called adaptation. And I'll define adaptation in a very, very simple term. So adaptation simply means that how do we make ourselves less vulnerable to the impacts of climate change? So once we let's say identify all our supply chains and businesses, how they are vulnerable to climate change, what steps we can take to mitigate that. That is called the true adaptation plan. And once we develop that adaptation plan, it's a fairly comprehensive exercise, asset at the asset level, at the supply chain, vendor to vendor level. But once we create that plan, we know for sure that, okay, these are the weak points in my businesses which are more vulnerable to climate than others. And then third step, having known that, we decide something called insurability strategy, because we would like to transfer these risks to an insurance company. So this whole chain basically helps us to prepare ourselves from, let's say, creating a sound adaptation plan for our business to deal with climate change.
I'll ask you some naive questions. I'm assuming this is a fairly new concept in the Indian environment. Do businesses today in India appreciate the risk that climate poses?
For sure. So our experience has been very, very encouraging. So a majority of the business houses have appreciated the impact of climate change on their balance sheet. And they have sort of started this exercise of identifying how their businesses are exposed to climate as a topic. And on top of that, you would have heard SEBI coming up with something called BRSR Core. So it is Business Responsibility and Sustainability Report. So it's basically a regulatory framework to disclose ESG related parameters, and climate becomes a very, very vital part of it. So I would say it's a good start even from the regulators and for the corporates to take first step in this direction.
I want to go next level. I can understand big established capital-rich businesses going ahead with this whole exercise. But the ones that end up being the most vulnerable are smaller businesses. And is there a growing appreciation? They in turn feed into many larger businesses that are part of the supply chain. So when we talked about, risk to the supply chain, it's important that each feeder piece of that supply chain also appreciates the risk that climate poses. So in your experience, is it filtering down?
Oh yes. So when I talk about these, the large significant business houses, they are basically stretching themselves to go to the next step to see how their vendors are placed, be it in terms of the emissions they are generating, or in terms of how vulnerable they are for climate change. So it is basically the responsibility of these big houses to sort of educate the smaller ones who are sort of feeding them with a large number of inputs for them to run their own businesses. So it has already started happening. And when we talk about the ESG disclosures per se, there is a particular portion where these big industrial houses, they are expected to screen their suppliers as well, both in terms of vulnerability and the emissions they are generating.
A tricky question that I'm asking you, because it's always impactful to say this is a number that captures what the risk to business today from climate is. Is it possible to quantify for individual businesses, this is the potential loss that you're staring at or the hit you're staring at? And does that extrapolate to a number for the entire economy?
Yeah, very good question, because end of the day, it should not be a philosophical discussion, because understanding climate risk, vulnerability and exposure is very good at the corporate strategy level. But only when we put a dollar value against it, the businesses will get some kind of confidence from their investors, credit rating agencies and shareholders. And a lot of work has already been done in that direction. So there are already established methodologies. I'll only share with you the crux or the core of how these methodologies work to quantify the climate risk. So all these methodologies basically work on something called scenario analysis, and I'll spend a couple of minutes to give you some sense of what scenario analysis is. So scenario analysis in the sense gives an indication that how a business will be exposed to climate risk in the future scenarios and in different warming scenarios. For example, today I can make an assumption that the global temperature rise will be limited to 1.5 degrees Celsius. Very, very optimistic assumption. But when I make that assumption, I am making several other assumptions at the same time, that there will be huge climate action on the ground. Governments will be very, very willing to come up with climate pro policies. So if that happens, then we can anticipate huge amount of transition risks. Because a carbon intensive sector, then they should be prepared to phase down their expansion plans. And when we do this analysis, we put a dollar value to each of these emerging risks. Now I take a different scenario. If I take a very pessimistic scenario that, okay, the warming is going to continue the way it is currently, so obviously there will be no transition risks. But then the frequency and severity of weather events will go up. So I'll have to attach the larger dollar value to the assets which are prone to these weather events. So like that, we take several scenarios on different time horizons, 2030, 2050, 2070, and then put a dollar value against each of these risks to come up with a sort of quantifiable climate risk for a business, if that answers your question.
It does indeed. Brief question before we head into a break. Is there enough data on the ground to make these scenarios, or is that a challenge in the Indian context?
So data is there for sure. If you'd have asked me this question 10 years back, I would have been skeptical. But now we have global data. We are downscaling it to the regional levels. So we have fair amount of data and climate science available to do a good job.
On that note, we're going to take a quick break. When we return, we've outlined the risk that extreme climate poses to business. What can businesses do to some extent protect themselves against this risk? Find out after the break. Welcome back to Serious Business on NDTV. We're talking today about the risk to businesses in India from extreme climate conditions. And Pankaj Tomar of AXA is with us, deep expertise in this space and working with Indian businesses, if I can presume to say that, to really assess, manage, perhaps insure also against the risk. So you're a business, you have an understanding of what extreme climate could do to your business, whether it's physical risk or it's transition risk or it's regulatory risk. Now, how do you protect yourself? How do you do that in the Indian context?
Okay, so see, if we talk about insurance industry per se, they have been insuring climate risks from last several decades, because when we talk about physical climate risk, be it a cyclone or extreme floods or the earthquake scenarios, there is already a protection available from the traditional insurers. What we see now with this transition to the low carbon economy, the new and emerging risks are coming up. And I'll give you a very, very relevant example in Indian context. So we all are witnessing huge investments for renewable energy sector, both for the solar as well as wind power developers. but you'll be shocked to know that this sector itself is grappling with the challenges coming from climate change. How? The wind availability or the solar radiations are going down with climate change. So on one hand, we have huge optimistic plans to invest more on renewable energy sector. On the other hand, this transition itself is throwing a particular risk with which this sector is going to grapple. So insurance industry is expected to come up with such innovative solutions to provide covers for these new emerging risks which are basically emanating from transition to a low carbon economy.
That's a very forceful example, how the renewable energy sector itself faces transition risk. So you're saying there is a product out there that can capture the emerging risks to business, and businesses are accepting of it?
Oh yes. So when we talk, so there's a specific term used for it, and it is called parametric insurance. And Indian insurance market has huge experience of dealing with this term called parametric insurance, particularly on the agriculture side.
So you're saying actually those in agriculture have been opting for it for a longer period of time?
Under the flagship PPP scheme which we run in the country, this PMFBY we call it. So there these weather-based parametric insurance covers have already been there from last several years. But if I talk about non-agriculture sectors, it's a quite, I would say, in a nascent stage, the whole idea. And it is for the businesses also to come up with their requirements. If they feel that some of their elements of the businesses are vulnerable to climate change, they can approach the insurers to design something which is, I would say, innovative and customized for these businesses.
I'm not an expert in the field, but my understanding is that one of the problems with the existing physical risk cover that you get from insurance policies is potentially lack of adequate coverage. I mean, you know, when does the payout happen? Under what terms and conditions does the payout happen? And in that scenario, parametric becomes a more viable sort of path to protection.
Sure.
A, is my understanding correct? And B, what are the advantages from a business's perspective of opting for parametric instead of the traditional, you know, cover for physical risk from extreme climatic conditions?
Sure. So let me elaborate it a bit more. So traditional insurance covers, as the example you have quoted, they primarily work on the principle of indemnity. So when I say indemnity, as an insurer, my job is to make the loss good, which has actually happened with the business.
Maybe due to a flooding of the factory or whatever.
Exactly. But in order for us to estimate what is the actual loss the business has suffered, sometimes it takes months, sometimes it takes years for them to come up with something called a loss adjusting or a loss survey report. And especially if there is a extreme catastrophic events, for sure it takes years for the insurers to come up with that estimate. So that is the biggest pain point with the customers. So how parametric insurance are helping them there is that they do not work on this concept of indemnity. Rather they decide something called index upfront. For example, if as a customer I want to take an insurance policy for cyclone, so I'll go to the insurance company and say that, look, I want to take a policy on parametric basis. My index will be the category of cyclone. So severe the category, I should be getting more money from you. So that is the first step to decide an index.
And so that's faster in terms of payout for the insured.
Exactly, and I tell you why. Because the moment I decide on the index, for me, the category of cyclone becomes the driver, whether I should be getting a claim under the policy or not. Like for example, I tell to the insurance company that I'll take a claim in the event there is a cyclone with category more than 3.
Got it.
So that becomes my driver for the claim to be admissible under the policy. The second element is that, okay, what if it exceeds category 3? How much you should be getting? That is also fixed in advance. So the policies are structured in such a manner that The index are set in advance. How much the clients are going to get in the event that index is breached is also set in advance. So the whole chain is quite transparent. So we know from day one that if the eventuality happens, in how much time and how much amount I'm going to get from the insurance company. So it basically gives a relief to a CFO because there is a money available within weeks on the table, and that money can be used to mobilize the equipment and resources. So that is one advantage parametric insurance is bringing on the table. And I'll categorically mention it that parametric insurance is not there to replace the traditional indemnity insurances, but rather to complement. Because once we design something on the parametric basis, it gives an immediate relief to the CFO while he can wait for a larger claim to be paid from the traditional policies.
Okay, so I'm going to urge you to be as honest as you possibly can, keeping all the compliance norms in mind. Has it taken off beyond agriculture, parametric insurance? And what are some of the challenges on the ground in designing and delivering a product that is, embraced? Because the logic, while we're sitting here and having this conversation, seems compelling.
Sure. So first I'll give you some examples where it is picking up, where the industry is finding some traction. And real example, if I'll have to take an example of, say, Nepal. So if there is a large infrastructure project today coming up in Nepal, the insurers are not comfortable providing earthquake cover at all.
Yes.
So that's when, and if that project is funded in a non-recourse mode, the lenders or investors will be insisting on a cover because they cannot go uncovered funding for that particular project. So that's where something like parametric insurance comes handy. And there have been several such examples already in place. In India, if I'll have to quote some examples, and I have already given that example, renewable energy sector, they are looking at it with a lot of positivity, and there have been several policies already sold in the Indian market because these developers now realize that the productions which they are achieving are not as they had envisaged when they had put up the projects on the ground.
And there seems to be an implication, and correct me if I'm wrong, that the payout for the insured under parametric is small but quick, and under the big claim you get a larger amount but could take years. Is my understanding correct?
Absolutely, and that's where I said that there can be a complementary sort of relationship between both traditional and the parametric insurance.
But for those who are offering this insurance, you haven't answered my question on challenges that you really experience in providing that assurance.
Okay, so climate science is the core of designing parametric insurance, because what essentially we are doing under parametric insurance is that we are pricing the probability of a climate event happening. So the level of scientific expertise with the insurer who is designing these covers will basically decide the adoption of parametric insurance in a particular market. Because once you decide the trigger for any event to happen, that trigger should be as close as reality. Because in the event the client is facing the damage or loss to their assets, but your trigger is not getting breached, that will sort of create some bit of doubts in the minds of clients whether parametric insurance is good enough for them or not. So climate science becomes the core for it to become successful.
Well, that's very succinctly put by you. Thank you very much for this conversation today. Illuminating for me certainly, and for those watching, I hope. Pankaj Tomar, great to have your insights on serious business.
Thank you, Manvi. Thanks for having me here. Thank you.